Sure. May just asked about the EMAs, so I'll discuss that real quick. So everybody has a different opinion on them and what to use and when to use them and how to use them. But the way that I use them that's worked for me is I use the 9, the 20, the 50, and the 200. And the EMA is the exponential moving average, which basically just takes more into account recent time. It gives more weight to the more recent times and the more recent volume than it does to just over all time. So the SMA is a simple moving average, is just all time equally weighted across the moving average, whereas the EMAs focus more on, gives more weight to the current status of things. When the 9 crosses over the 20, it's typically a real bullish sign. So you'll see that happen today. I'm usually watching on the 1 minute. Let's see when it happened today. So the purple line on mine is the 9, and the yellow line is the 20. So the 9 pulled over the 20 on SPY at 394.30. And you can see we're at 396.50. So right now, actually, the 9 just pulled under the 20. So if I would have just done this as an EMA trade, and that's all I knew, that's all I focused on, and I entered when the 9 crossed the 20, I would have entered at 394.3. And if I didn't exit, so Michael, this is another way that you can be more smart about your exits. So we pop up here, right, and you're at 396.50, and you're like, oh, this is looking pretty good. There's one reason I would exit this here is because it's too far away from the EMAs. So when you get too far away from the EMAs act as like magnets. So you're typically going to pull back, your price action is going to pull back to these EMAs at some point in time. So when you get really far away from them, I typically will exit the trade just because I feel like we're too overextended, especially you'll see right at that exact same time. The RSI down here was at like 75, and Terry's on this call. I think he was asking me about RSI too, the oversold. So that's how you tell oversold is this little blue line at the bottom. It's called RSI. It's your relative strength index. So if it's over 70, it's overbought. And if it's under 30, it's oversold. And all that means is basically, if it's overbought, is a good chance that the buyers are getting exhausted. So they've been buying so much, all the buyers have been in charge buying. Everyone that was going to buy has already bought. So the buyers get exhausted there and run out of stuff to buy. So that's why I don't really buy when it's overbought, and I don't usually sell when it's oversold. So that's the RSI, the overbought, oversold index. But back to the EMA. So if you would have just bought when the 9 EMA crossed the 20 EMA today, you would have got in at 394.3. And if you would have sold when it was overextended, like I said, I would like to sell, it would have been out at 396.50. So you would have had a solid 2.5 point move there, which can be big money if you do it right. Now let's just say you didn't use the overextension as an exit like I do, and you had the rule in your head that as long as we're above the 9 EMA, I'm gonna stick with it. That's okay too. A lot of people do that. So you'll see we're above the 9 EMA, or the 9 EMA is above the 20 EMA rather, you'll see the 9 EMA staying above the 20. It comes down, it pulls down to the 20, but it doesn't go underneath it. So you would have held here. It would have gone up again, you would have held. It would have pulled back again, you would have held. It would have gone up again, you would have held. And then the 9 would have pulled under the 20 recently at 396.60. So that's the same exact point that I said I would have gotten out just from being overextended. So that can help you with your exits if you use that as a I don't use it as an end all be all. Like I'm not like I'm definitely gonna enter just because this happens. But when I see it happen and I planned on entering and it looks bullish and the tape looks good and everything else, all the stars are aligning there, I'll use it as confirmation as a good reason to stick with the trade. Let me know if that helps, guys, in the chat. Mike said RSI over 70 is overbought and under 30 is oversold. Is that every stock or just about? It's every stock. That's just how RSI works. It doesn't necessarily mean it can stop being bought. So like you'll see here this morning, it dropped to oversold at 9:30 right at the open, and we were oversold all morning until, well, for like 10 minutes straight, we were oversold. So just because it goes oversold doesn't mean it's going to bounce. And there's times, this is the hourly chart. So you'll see here, we're oversold for 4 or 5 hours straight here, 6 hours straight here. So just because it's overbought or oversold doesn't mean anything. Again, those are just confirmations. For me, I use those more to tell me when not to do something. So like a lot of guys in the room are chasers, and they see SPY this morning when I'm selling and taking profits. That's when they're thinking about getting in because, oh, it's going up, up, up. Is it going to keep going up? I don't know. Is it? I want it to go up. It's going up. And it's all this momentum they want to go with, but they don't know how to play momentum. So I don't see many people in the room playing momentum correctly. I see them trying to play momentum and sucking at it mostly. But EMA is more important than RSI, but both help with. I don't know if I'd put more weight into either one. But sure, yeah, probably EMA is probably more important than RSI. But it's all just part of a big picture. It's like, I don't know, a good comparison to make it to. I don't have a good analogy here, but it's just part of a big picture. You got to see it all. You got to take it all in. Real quick though, I wanted to dive into our chat here and go over some of these mistakes people are making because they're frustrating me, and I just want to talk about it, be done with it, and make a video about it. And then if they just keep not listening, I can just keep sending them the video so I don't have to keep explaining myself. It's really annoying. All right, so hold on, my son's about to walk in real quick. What's up, buddy? I'm on a call. Can I help you? You feeling okay? I'll be done in like 10 minutes. I'm done trading already today, so I'm down to play with you, okay? In 10 minutes. 10 minutes, yeah. All right, so starting with Arturo here, wrong plays and never at a stop loss. So he knows what he did wrong. The irony is, before he lost this, I told him you have to start setting stop losses like the day before this. And I've been talking about setting stop losses this entire challenge. So if you just guess the direction of SPY, or like, I don't know, this morning, let's just say you got short up here. Let's say you got short when the 9 EMA crossed the 20 EMA this morning, going down to the downside because you thought it was going to keep going down. Let's say you got short there, and then immediately it bounced off the 50 EMA this morning. I would have had a stop loss there and I would have stopped out. Other people, they want to insist on being right or just smoking the hopium, and they're just going to watch that bounce and go up and then not stop out. I don't understand it. I don't know why you would do that. So use a stop loss or lose all your money. And I don't know what else to tell you. All right. So let's go up to Terry. Terry's doing good. He's listening to what I tell him. So he's making money. It's that simple. Chris is doing okay. Looks like he's using a stop loss. I think he might have lost a little bit, but it was, you see, Chris lost a little bit and then stopped losing money. Whereas Arturo, same, probably similar plays, similar setups and things, he lost a lot because he didn't stop out. So I'm okay with losing a little bit on multiple occasions so I can get a lot. Like I lost Monday, I lost Tuesday, and I lost Wednesday. I was fighting to break even on those days. But I was okay with that because I knew a day like today was going to come sooner or later. So when today came, I was ready for it. And I made back way more than what I lost the past 3 days because I control my risk. So when I lose a little. And when I gain a lot. And that's just comes down to controlling risk. So I hope let me know if I say your name right, but is it Gitika? Am I saying that right? Gitika. Here, you can unmute if you want.
Yeah, it's good to go.
Okay, cool. Gitika. All right, so let's take a look at yours. So you're one I wanted to yell at too, because I told you stop doing these out of the money things and you kept doing them. So out of the money calls, especially on SPY on a day like yesterday, it's gonna burn you fast because the money just keeps deteriorating. Your time decay is just gonna keep eating it away if it's trading sideways. So if you're at the money and it trades sideways, you're not gonna be losing very fast. You're gonna be that time decay is gonna go very slow. Whereas if you're out of the money and it trades sideways, it's going away fast. It's out of the money, 0 days to expiration. It looks like you're holding too long, not using stop losses. Does all that sound about right?
Yeah.
Yeah, so it's just a discipline thing. You gotta like my stop losses the past 3 days have been super tight. So when I've been getting in SPY at here, let's just dump into the other chat and see what I've been saying. So this morning, for example, so I got in at 394. My stop loss was literally just 20 cents lower than that. All right. And then I got out just 40 cents higher than where I got in at. Got back in at the same place that I got in the first time, got out 50 cents higher, got back in, made a whole dollar higher that time, got back in, made 80 cents. I couldn't hit this one fast enough, and that was a nice one. So sorry about that, but I made about another dollar there. And then I made 60 cents there. And now all of these had stop losses right below where I entered, like 10 to 20 cents. So the past few days when I've been losing, I lost very little. So like here, I got in at 393.6. It went up a little bit. I got out right away when it came down. I got out even. So this one I was in at 394. I was in at 393.50. It went up. So I was right here, started rolling with the momentum, added some at 394. We were just pulling over VWAP. So I wanted to see a big breakout through VWAP. We didn't get it. So I had a stop loss. I set a stop loss once we started going up over VWAP. We pulled back to VWAP here a little bit. So I added a little bit there. But once we fell below it, I stopped out right away. All right. And then I was able to get in. I wasn't able to work that one. But then I was able to get in again. Close, well, higher than where I stopped out at. But the point is just not forcing those trades and not getting in and smoking the hopium and just waiting for it to go up when that's not a strategy. Hoping, waiting, praying, none of these are applicable strategies. You just gotta set stop losses. Stop losses and position sizing. So I see people lose 20% of their portfolio in 1 day. And I told you guys never to have a position size higher than 10%. So May is up. She's doing good. See what else we got here. Gideon, why is Gideon losing? So Gideon said just a series of bad moves. It looks like he was doing the same thing as Gitika was, and that is out of the money calls, tons of out of the money calls, same day expiration, out of the money, same day expiration, out of the money. And then finally went in the money with a put, and that might have worked for him, but at that price, it didn't make out there. So yeah, go ahead and hit me, Terry. I think that's all I had to pitch about today. See if anybody else got silly excuses in here.
Okay, quick question. Let's say my challenge account has $500
and I make 2 trades worth 250 each. Basically, I've used my cash amount for the day for my account, correct?
Correct.
Okay, thanks.
So yeah, part of the reason I wanted you guys using cash accounts for this is just to get used to being able to be done for the day early. And when you use cash accounts, you're forced to do that sometimes. So like you make a couple bad trades and you're done. Or you make a couple good trades and you're done. But no matter what, it keeps you from over trading, going all day long. Looks like Jay's doing good. Cole's doing all right. Chris, yes. See, Chris, remember when I told you he lost a little doing the same plays as everybody else who lost a lot? And his explanation was that he got stopped out many times trying to trade a reversal that wasn't there. That's okay. That's a perfectly okay explanation, perfectly okay thing to happen. You have to be okay with losing money too. I'm sure you've heard of the phrase, you gotta lose money to make money, or you gotta spend money to make money type thing. So you gotta be okay losing money, but with just losing a little bit of money, not a lot of money. That's the biggest difference. This dude pissed me off when he said that y'all need to use levels in your trade. No shit, genius. What the fuck do you think we're doing? Fucking. So yeah, it seems like most people know what they're doing wrong. I was hoping Steve was on this call to discuss the small cap plays, but he's not. But I'm sure you guys have heard me bitching about that too. And it's like with these small cap plays, you either got to, let me go in here. So let's take VRM for example. So with Rome, I got in this play as a short squeeze play a couple days ago, maybe a week ago, when it was just under $1. All right. This thing is so consolidated that you can't even see it. But it was just under $1 here. Now, first of all, when I entered this play, I was perfectly okay with losing 100% of my investment on this play. So I probably dropped $1,000, $2,000 in here, and I'm okay with losing $1,000, $2,000. That's pennies to me, so I'm okay with that. Now it ripped up to 139. Now I was buying on the way up when I saw it start ripping. And then when it got up above like 130, I started taking some profits. And I think I sold enough when it was over 130, or like around that price to cover the whole investment. So let's just use easy numbers. Let's say I invested $1,000, and when it went up to 139, it was worth $4,000. Now at that point, I sold $1,000 worth. I took my initial investment off the table, and then the other 3,000 ran. And I'm still holding the other $3,000 worth of calls, which are probably worth like $500 right now. So I'm up $500 on the play. Granted, since the spike, I'm down 2,500, but that's just since the spike. Now, what Steve did is he tried to play this as a momentum trade. He didn't buy it down here when it was near 1. He saw it start going up. It's 105, 110, 115. That's when he starts buying. And then it's going 120, 125, 130. That's when he's buying more, buying more, buying more. It's like, man, this thing's going. This thing's going to go forever. I love it. Let's go. Trading that momentum trade. Boom, it gets rejected. We see some different, I was playing that Powell pump. I knew that Powell pump was coming, and it came. Took my initial investment off the table, so I can't lose. And then it starts trickling down. And these are called high beta plays, meaning that when the market moves a little bit, these babies move a lot. So when the market went up 3% on Powell pump, this baby went up 40%. And when the market went down on recession mumbo jumbo, the market went down 3%, and this baby went down 20% or something, 30%. So that's a high beta play. You have to understand these plays to be able to play them, or you have to not give a fuck about losing your money to be able to play them. What drives me insane is when people get in these plays, whether it's AMC or VRM or any of these small cap plays, CGC, Nokia that we entered today, RKT that we entered today. All these plays, you have a couple ways you can play them. One, they're going to pop. You're going to make a couple bucks, and you can sell them and take your little bit of profits. Two, you can just hold them and pray, and it's really just a lottery ticket. And there's a thesis, so it's safe in a lottery ticket because a lottery ticket you could go either way. There's a thesis behind it, but It's a way to play with less amount of money. So AMC, VRM, these calls are very cheap. Let's see who jumps in here. And so the way to play it with, oh, what's up, Gideon? The way to play it with very little money. So instead of buying SPY calls when Powell or when CPI is going to come out or Powell's going to give a speech, I could buy SPY calls for a couple of days out and it would cost me hundreds and hundreds of dollars. Or I could buy AMC calls a couple of days out and it cost me 10, 20, 30 bucks. So it's a way to play the momentum of the market with a high beta name that's going to move more than the market for less money. And it's a way that I'm okay with losing money if it goes against me. So hopefully that makes more sense out of those plays. And yeah, if you're new to trading or you can't lose money or you don't understand them, I would just avoid them altogether. Is that you, Steve, saying I'm here, iPhone? I hope so. And I hope that explanation made sense for you on why I'm adamant about avoiding those plays. Also, anything you see come through the alerts. First of all, if you're newer to this, if you haven't been trading a lot of trade SPY, that's it. Get used to trading something. And it's just way too many variables with way too many names. And yeah, if you got a small account, I definitely would avoid anything red, anything high risk. I would, a small account, that's why I wanted to do the SPY. 9 EMA is under 20 because you can quickly, with the SPY, you can build up your account size quick. So you just in and out, in and out, in and out. And yeah, you'll lose a little bit quick too. So you can lose 50 here, lose 50 there, here quick. But then when you gain 200, 300, 400, 500 at a time and you build that counter. Michael asked, the 9 EMA is under 20 and getting a distance below. What is that indicating SPY now? Good question. So what I would do here, if I wanted a quick YOLO with a tight stop loss, you see how it's approaching VWAP, but it's far away from the EMAs. Typically, remember I said those EMAs like those magnets. I'm willing to bet this next bar will come back up to the 9 EMA right here. I'd get in right this second and I'd cut it if it went below VWAP and I'd cut it at 9 EMA if the tape slowed down. That's not a play I would have to take, but that was kind of like the plays I was taking the past couple of days just to try and. So my commissions on trading these futures has been absolutely astronomical. It's like $4 for every round trip for every contract you trade. And I'm trading thousands and thousands of contracts a day. So I'm racking up like $10,000 to $20,000 commission bills in one day. So I'm just, if I take a loss plus I had to pay all that commission, I get a little salty. So I'm like, all right, I'm at least going to make my commission check back. And so that's when I was like, grab a little here with a tight stop loss. Watch for this to pull up. So let's say we get in at 395.8. Cool. It's holding, it's holding, it's holding. I set a stop loss at 395.65. Enter at 395.8. So that's how tight my stop is. So I'm not willing to lose very much. You don't have to lose if you're not willing to lose. If you're losing a lot, it's because you're willing to lose a lot. So I'm in at 395.8. I'm trying to watch for, this is called a return to moving average trade or a return to the mean trade, a mean reversion trade, you might even say. And so we're using VWAP as our support. You can see VWAP is also right around this 200 EMA. So we can use either one of those for support. Now, when I would cut this is if this 9 EMA came down to meet my price action instead of my price action coming up to meet the 9 EMA. I'd also watch the tape right here. If this was very red like that, and maybe the numbers keep going down, see they're going up though, 75, 74, 73, 74, 75, 76. Those numbers are all going up, so I'm not as concerned. But now 69, 68 in the red, I'm seeing 69, 68, 70, 71. I'm seeing them start getting a little lower. like I said, my stop loss would be right there. I would have stopped out. Just because we made a new low. But you can see the RSI here. And if you can hear my tone of voice and how unemotional I am about this, that's very important. Like, and I stopped out. Oh well, like me. Like when you start getting frustrated and when you try to start forcing these plays, that's when you guys start making these mistakes, chasing, listening to random people that you don't know nothing about. Oh, so and so said it was going to go down, so I thought it was going to go down. Don't listen to anybody. I really don't even want you guys listening to me. To be honest with you, I want to just brain dump my thoughts onto you guys so that you can see how I'm thinking and then try to figure out how you want to think, you know. If that makes sense. Hopefully that doesn't diminish my value to nothing, but I would rather somebody teach me how to think than it's kind of the difference between teaching how to fish and fishing for you type thing. Like I could make a trade for you and then we can trade today and you might make some money today. You might lose some money today and then you blame me for it too, which I don't like either. So, but I can make a trade for you. You could copy my exact trade, make a couple bucks today, and then I could fall off a fucking cliff tomorrow. Who knows? And you never hear from me again. Then you can't do anything by yourself. Or you go by the next dude's fucking alert service who's full of shit and he tells you to copy his trades and you copy his trades and you fail and you copy somebody else's trades and you fail and you wonder why you keep failing. It's because you never learned anything. So I wouldn't copy my trades. So see, we did eventually return to the EMA here, but only a few points higher than where we would have started. Now I would watch for the reversal here. Since we did bounce near VWAP at the 200 EMA, I'd be watching for the reversal here to the upside. Like I said, you got to be okay with stopping out. You got to be okay. I'm always okay with losing a little bit of money. And I try to never be okay with losing a lot of money. But even when I am okay with losing a lot of money, the trades are always calculated. Like I'm never just guessing. Even if I am guessing, like I'm guessing and I know that I'm guessing and I've prepared for that guess. Like you got to have that risk management in there, which I guess is what a lot of people are laughing. Yes, exactly, Meg. Because I've had so many people like, oh, I blew my account and I was just doing what you do. I'm like, well, I'm down $5,000 this week and my account's at 500,000. So I'm down 1% and you're down 100%. So maybe you should figure out your own strategy here, you know? So yeah, maybe dead right there. Anybody else got any questions? I'm about to go chill with my kids in a minute here. Yep, that's good, Terry. Terry, I'd say Terry and May, both of you guys, I'd say are probably learning the most and coming along the quickest and doing the best in terms of and Michael too. It's really absorbing everything and playing it safe. You guys definitely have the best risk management. You guys aren't accepting those losses. I think that's probably one of the biggest problems that other people have in the rooms are taking losses, maybe averaging down and losing positions and things like that don't usually work out. But go ahead and hit me, Michael. What's your one last question? May, how do I identify a momentum trade? Let me find a good example for you. So I guess with a momentum trade, so like yesterday, there hasn't been many lately. So you see how GameStop kind of ripped out of here. It has momentum to the upside. So one way that you could play this, that I would play this would be like, this is called like a continuation trade. So you see how we got this 1 5-minute bar at like 950 and we ran all the way up to, we ran from 2250 to 2350, we'll say for easy numbers. So that's momentum to the upside. Now you don't want to buy it up here, though a lot of people will, but you don't want to. And then you see how this red bar came back down and it came back and touched VWAP And right as it's touching VWAP, you also have the 9 EMA crossing over VWAP. 9 EMA is over the 20 EMA. So I would have entered right around there at like 23.20 and then played it to maybe like 24.20 probably. So that's kind of like a momentum trade. Momentum is essentially just like if you wanted to trade momentum today on SPY, you'd be long, you'd be bullish. The past few days, you'd be short, you'd be bearish, just because momentum is just kind of trading with the trend and the continuing. The past videos pinned somewhere. I missed a few and they got lost in the chat. Yeah, they should all be pinned. All the important ones, anyways, are pinned in the options room or the options challenge room, the small account challenge room. Yeah, Michael said when I talk about stopping out and whatnot, you list a price, and since you're using Webull Mobile, the stop loss is set by contract cost, so you can do that. But when I'm trading, I'm more focused on it. So I wanted to show you guys NinjaTrader, but the problem is when I put NinjaTrader on the computer that I use to stream, my battery's kind of messed up on that computer. I bought a new one. I didn't like it, so I returned it already. But so it kills my battery immediately the second I turned on NinjaTrader. So I have to use my other trading computer, which I don't really use for anything besides trading. But so with my stop losses, I do them one of two ways. If I'm using NinjaTrader, you can actually click on the chart and just say to stop out here. So like on SPY here, I would click, let's just say I want to stop out if it went right below VWAP, I would just right click 395.50 and I would hit, say there's an option here. I would put like, yeah, you can do it actually on Webull on the desktop. So you can put in a sell order or create alert even. But you can put in a sell order, make it a stop loss. And so make it say that you would sell it if it got to there. That's pretty much how I do it. If you have to, and I a lot of them I just do manually in my head. So I'm just watching and I'm gonna hit sell. It's like I call it a mental stop. I'm gonna hit sell if this happens because I know we're losing momentum or we're losing the trends that I was originally trading. So I'm just gonna sell it here. When I show you guys NinjaTrader eventually, I'm probably just going to put Zoom on my trading computer, even though I don't want to be able to show you guys NinjaTrader, and then I can show you all that stuff. If I was you guys, I would go sign up for Apex right now, because why keep risking your own money? Basically, you can do like the small account challenge with somebody else's money and make it a big account challenge. Did anybody have any questions about Apex real quick before I go? Trading futures is the same thing as trading anything is the same thing as trading anything. Like if you're trading shares in SPY, like looking at the SPY chart right now, bouncing at VWAP, you could buy shares here. You can enter a futures contract here. You can enter an options contract here. No matter what method you're using to trade, it's all the charts are the same. Moving averages are the same. Like everything's the same. The only difference is the method or the, I don't know what you want to call it. The vessel. So I'd probably go short here on SPY really though. But I'd rather break under 395.44 before I did that. Make a new low. That's one. So that's a momentum trade. May, you were asking about like how to trade momentum. So I usually only scout momentum really quick. So let's say this breaks 395.44. I'll show you what I would do if it does. I'll tell you in 1 second. It'd be momentum trade. Yeah, I'll even do it. I'll do it. I'm out. I'm short. I'm short. We broke to that new low. I got short at 395.44. And right now I'm just watching. It's okay if it bounces up a little bit. I'd like to see a reject at that 395.44 and head lower. So I'm short here. I'm staying short because I have the momentum to the downside. So I'm staying short. I'm short. Still short. And still short. Still short. Still short. And I would cover here just because RSI is oversold. We're pretty far from the MAs, but you see, that was a 40-cent move. That was a 40-cent move in like 10 seconds, maybe a minute at the most. But we moved 40 cents, and now we're taking that momentum to the downside, gotten in the second it broke to new lows, and gotten out the second it was overextended. And you can see how that's kind of hard for me to alert sometimes. I make plays like that. Sometimes I'm unable to alert because that was literally less than a minute that play took. So. And Terry, you cannot trade options with Apex. It's futures only. But now that I've learned futures, I can tell you that futures are a lot easier than options. They make them sound a little bit more complicated. And I heard that one of the reasons they do that is to keep retail traders away. I don't know if that's true or not, but they sound a little more complicated, but they're not. And everything's the same. Like if you buy it, you buy it. Like if you buy SPY long here, you're going long here, whether you're using options, calls, whether you're selling puts short, whether you're buying futures contracts, it's all the same. Yeah, I would highly recommend everybody go into Apex Trading. I pinned my link. I posted in the Facebook group as well. Actually, I'll go on Facebook right now. I'm gonna tag everyone in that Apex post. And so what they have you do is you got to pass a test or an evaluation. So like I've been trading their $250,000 accounts. So to get a $250,000 account funded, you have to show them that you can make $20,000 without ever losing $6,000. So simple enough. But yeah, I'm gonna tag everybody in the Facebook group, so just check your notifications. What's up, Buddy Bear?
Try to unwrap it, but it's gonna screw it. This way it just goes
fixed it.
in.
Yeah.
I don't know how to do it.
So that is Gingerbread Captain Marvel. I meant to get a Gingerbread Captain America, but I got Captain Marvel instead by accident.
Can you shut it so no noise comes in your back?
I'll shut it. Just be careful with it. I'll have to.
I can shut it. No.
All right, so I just tagged everyone in that Apex Trading post. Make sure you go on there and sign up. It's like if it's not 50% off for you, ask me because I have a code to make it 50% off. But I think the link that I posted will just make it 50% off either way. And then we can start diving into that. It's pretty much the same. Sorry, my son's on my butt right now. So I'm gonna let you guys go. Feel free to drop any questions in the chat. Probably gonna stay out for the rest of the day. That's one take that lesson from me is when you make good money, get out and leave for the day. No reason to keep forcing it. But if you're in your zone and you're feeling it, that's a good reason to keep forcing it. But I'm not in my zone today by a long shot. I got my kids home sick, so I'm gonna play with them. And be happy with my games today. All right, so I'll be in the chat a little bit if you have any questions.
Best daddy in the world.
Best daddy.
How can you fix that? Can you fix that computer runs broken?
Wish I could fix this computer when it's broken.
But you did fix it. Right? And who did even fix this computer when it broke? General?